I've got a very brief presentation for you. We're going to spend a very small amount of time on my PowerPoint and actually spend most of the presentation on my live chart. So let's not waste any time. Let's get right into this. Just a bit about us here at Trading Wins before we get right into it. We are a group of pro traders with well over 30 years of experience. We're real traders and real teachers, and we've been developing our own strategies and trading systems for many, many years, and teaching people around the globe from complete beginners to experts. Now today, I'm going to share with you the exact same money management rules that myself and the other traders here at Trading Wins use on a regular basis. I'm going to tell you exactly what you're going to need to apply this system, and then I'm going to show you the setup. And when we get to this part of the presentation, I will ask you to throw out a symbol if you want me to bring up a chart and analyze it together and show you how this would have worked on that particular symbol. So if there's a favorite stock that you like to trade, or an option, a futures contract, or Forex, or anything like that, at that point you can type it into your chat and we can analyze it together. And of course, time permitting, we will answer as many of your questions as possible. Now, before we get into it, a couple of very quick poll questions, just so I know who my audience is and I can tailor my examples to you specifically. Which market do you trade most? Is it stocks, options, futures, or Forex? If you can please take a moment and type that into your chat, I would really appreciate that. Excellent. I see quite a few options traders, Forex traders. Fantastic. Okay, thank you so much. And one last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Say 51 to 100 or 100 plus. Please take a moment and type that in. Excellent. Wow, a very active group as usual. That's awesome. Okay. Trading can be very, very risky if you don't know what you're doing. So please educate yourself before you begin trading with real money. Okay? And on that note, let's help you avoid some risk when you do begin trading, and let's review our money management rules. So, number one, do not trade with money you can't afford to lose. I'm sure you've all heard this, but it merits repeating. And more importantly, you need to trade with an amount that is completely, or feels completely insignificant to you. Okay? It needs to be an amount small enough that it feels completely insignificant to you. Now, the reason for this is trading is much more about how you manage a trade once you're in it than it is selecting an entry. Once you're in a trade, you need to remain calm, stay disciplined, and be able to follow your rules. If you're worried about the amount of money you have in there, you're going to have a very difficult time doing that. Okay, that's why I encourage you to trade with an amount so small that it feels completely insignificant to you. Now, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5% or even 2%. That way you'll still have a sizable trade on, but you will reduce your risk considerably. Now, never trade more, never have more than 50% of your account balance active in the market at any one time. And for some of you, this may seem odd. The feedback I always get on this is, why would I leave half my account just sitting there earning nothing? Well, the reason is this. First of all, when it comes to the markets, there are so many factors that are completely out of our control, and they're, at any moment can be a major news announcement or some event like 9/11 that can really drive the markets against you, okay, and cause a significant loss. So, number one, this rule is meant to prevent huge losses. So, and number two, if and when those losses happen, you will have half your account sitting there that you can then use to trade with and recover from those losses. And with the setup I'm going to show you today, it really wouldn't take you very long. One last rule we follow is never place more than 2 trades per day. And now this is with daily charts, but it works really, should be followed with any time frame. Reason being, recently we've seen the increased volatility in the market. So we've had many days where the Dow has been up 300 points, but then the following day, it completely retraces and is down huge. So if you have a huge update, for example, when you jump in and place 5, 6, even 10 trades, and the very next day it retraces on you, you're going to be in a huge hole right off the bat. And that's what this is meant to avoid, okay? You should always be very selective, spread your trades out, and only trade the best of the best trades, okay? A couple other rules or goals we have here, and one thing I'd really like you to walk away with today is you will never go broke taking profits, okay? Especially if you're just starting out. As you gain experience with your trading, you will find ways to stay in a trade longer and longer and squeeze out every ounce of profit. But when you're just starting out, bank those profits. Trust me, it'll take you a long way. And always remember, trading is not about whether you're right or wrong, okay? It's all about how much money you make when you're right versus how much money you lose when you're wrong, all right? So what will you need to trade this setup? Just about any charting platform will do. The reason being is the only indicator we are going to plot on our charts is the 20-period simple moving average. And it's used more of a visual aid than anything, but I'll show you when I show you the exact setup on the charts. So there is no need for you to go on and spend money on complicated software or hardware. If you're watching this webinar, you already have everything you need. A few benefits of this system. Number one, it will work on any market, okay? Stock, options, futures, Forex, globally, any time frame, any price level, we've traded them all, and I will show you examples of all of these. Also, you don't need a lot of experience. The setup is extremely easy to spot on a chart, okay? There are very clear entry and exit points, and it is very strong and can be used as a standalone trading system or as a great complement to what you're already trading with, right? Now, a bit of background on this strategy just before I show you the setup. When we first sat down to create this, there were 5 things we considered as must-haves. Number one was it had to be simple to spot on the chart, which it is, and I'll show you that in a moment. We wanted this, we wanted anyone to be able to use this with any charting platform, and with any level of experience, and you'll see just how quickly you're going to grasp this once I show you it. More importantly, we felt we needed to create something that had extremely low risk, and I'll show you just how low of a risk you will be taking with this. But most importantly, we needed something to be consistently profitable, and this has been tested and traded over many, many years through all types of markets, and it has been extremely consistent. So the only 2 components you're going to have here with this system, number one, the 20-period simple moving average. And before you ask it, we have tested this with exponential, with weighted moving averages, different settings. But over the years, throughout all our testing, what we found is the 20-period simple moving average works best. The second component you're going to be using or looking for with this setup is an engulfing candlestick pattern. Now, many of you have probably used this before and know exactly what it is. We use it a little differently, and I'll show you that in a second. But for the benefit of those just starting out, a simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by that number of time periods. So just a straight average. And the engulfing pattern is a reversal pattern. Okay? It can be bearish or bullish, depending on whether it appears at the end of a downtrend, which would be bullish, or at the end of an uptrend, which would be bearish. Now, rather than show you off this small photo here, let me bring up my live charts and show you exactly what I'm referring to, okay? Give me a second. So hopefully you can see my chart clearly. I will zoom in for your benefit as we go through the examples. Now, there's a couple of things I want you to always look for before you look for the actual setup. Whenever you pull up a chart, what you want to look for is trend and momentum, because when you trade with trend and momentum, half the battle has already been won. Okay, so trend. We have a chart here of the Qs, which aside from this blip here, has been clearly trending higher. And momentum, the way we look at momentum is by looking at the slope of the candles here, the bars, Okay, and this is where that 20-period simple moving average comes in as a visual aid, because we can measure the slope of the bars, but the 20-period moving average pretty much does that for us. Okay, now when we're looking for momentum, we can have slight momentum in our favor. Okay, we can have slightly more significant momentum in our favor, or we can have very significant momentum in our favor. In other words, the more significant that slope, the better. And when you have that, it's like having a wind at your back. It propels you forward, it pushes you forward, and that's what happens with these securities. So that's exactly what you want to look for. And it's exactly the same to the downside. You can have slight momentum lower, you can have more significant momentum lower, or you can have very significant lower. The more significant that slope, the better. Okay? So let's go over the actual setup. Now this is the criteria we look for a long trade. If we look here at the Qs during this period, we have a nice slope higher here based on the 20. And if we want to measure the bars, okay, it's just as significant. Now, once you get this slope, once you have this in place, you're looking for a period of either consolidation or pullback, okay, or retracement, right? And the real reason why we use the 20-period moving average here as a visual aid is because when we do get a pullback like that, it would be easy to mistake this pullback as downward momentum. Okay, sometimes it can be a pretty sharp pullback, and if you're measuring the slope of the bars or the candles, you could mistake that as downward momentum. But if you look at the 20-period moving average, throughout this pullback, it maintained its slope higher. So that helps us understand that this pullback or consolidation phase is nothing more than a temporary retracement. And then all we need to find is a reversal signal in there telling us that this retracement is over and that this will continue. Okay, so this is what it's going to look like on your chart. Let me just show you quickly for both long and short trades. So for a long trade, you want significant slope higher. The more significant, the better. You're looking for a retracement or consolidation, and then it's in this area where you're looking for a reversal signal telling you that this retracement is over and that this trend is going to continue. So what will this reversal signal look like? This is where our engulfing pattern comes in, and it will look something like this. Okay? Now, I got to tell you, there's a difference between the setup and then the trigger that gets you in the trade. So for the setup, all we're looking for, or all we're looking at, is the bodies of the candles, not the wicks or the tails. Okay? Just the bodies. And for this to qualify as an engulfing pattern, you need the candle on the right, the body of the candle on the right, to completely engulf the body of the candle to the left. Okay? It can be at the same level on one end, okay, but it cannot exceed it. All right? But this is a clear bullish engulfing pattern. Okay? And then for the trigger to get us in the trade, we'd be looking for a trade just above the high of this engulfing bar, but the absolute high, including the wicks, okay, to get us in the trade. But I'll go over that when I show you the actual examples. Let me draw out the setup for a short trade. Again, what would we be looking for? We're looking for momentum lower, the more significant, the better, some kind of consolidation or retracement, and then it's in this area that we'd be looking for that reversal signal telling us that that retracement is over and that downtrend is going to continue. And the reversal signal, which would be the bearish engulfing setup we'd be looking for, would actually look the same as it did for a long trade. In other words, the body of the candle on the right must completely engulf the body of the candle to the left. The only difference between these is, to the long side, you want your bullish engulfing bar to be green, okay, because you want it to close as close to its highs of the day as possible. The closer it closes to its highs, the stronger that setup. on the opposite end, for a short trade, this bearish engulfing bar here needs to be red, and you want it to see it close as close to the lows of the day as possible. Having said that, the previous candle in both instances can be any color. So in other words, you can have green and green here, or you can have red and green. It doesn't matter. All right? So let's look back at this example here on the Qs. We have momentum. We have a pullback. Now we're looking for a reversal signal, and it's right here. And I'll zoom in for you just to make sure you can see it clearly. Okay? It's right here. So you see how the body of the green candle here completely engulfs the much smaller body of the red candle. All right? That's the setup. Now for the actual trigger, we're looking for a trade above the absolute high of the engulfing bar, meaning including this wick, okay? A trade right above the high. And we don't actually get it on the very next day, but we get it on the following day. And this is another important point. If after two candles close, regardless of your time frame, you could be trading on the 15-minute, the hourly, or the daily, but once two candles have closed, if you haven't breached that high yet, then you forget about this setup and you move on and look for another trade. Reason being, if you can't get triggered into the trade within 2 bars, then the momentum isn't as strong as you initially thought, okay? And you don't want to trade that. Now, the other thing is that if it trades below the low of this engulfing bar first, then the trade is negated or disqualified, okay? That will prevent most of the losses you would otherwise have with the trades that don't work out. In other words, with this rule, most of the trades that don't work out for you would not even be losses. They'd simply be negated or disqualified trades, okay? Very important point. Now, once you do get triggered into this trade, okay, in other words, we trade above the high first, you would immediately put a stop just below the absolute low of that same engulfing bar. So your risk will always be confined to the range of that 1 bar, okay? And then once you're in this trade, it just becomes a matter of managing it. And the other thing you will notice as we go through these examples is that once you do get triggered in, the majority of these trades move in your favor immediately, which is very important for a few reasons. Number one, it will not only help you gain confidence in the system or the setup, but in yourself as a trader, which is huge. And I also noticed when I asked the poll questions that most of you on here trade options. Well, any of you who've traded options know that once you get in a trade, if it goes against you immediately, that loss in premium on that option is much more difficult to make back. In other words, you need a much bigger move to the upside to not only gain back that premium, but then put you in profit. If you have a situation where you move in profit right away, then that completely eliminates that problem with the option, and really helps you manage the trade. How much easier would it be if you were in profit right away to stay calm, rational, and follow your rules versus it going against you immediately, right? Okay, let's have a look at an example to the downside. And there's another reason why I want to show you CA here, a chart of CA. There's a couple of important points here. Now, the very first setup comes right here, and you can see that it had just started to roll over. So first point I want to make is when you get a chart like this where you may have a significant slope and it is just starting to turn over, okay? You may want to skip that, okay, and wait for more of a sustained move to the downside, okay? So that's number one. Number two, you see how this example, the engulfing bar, is a huge bar here? Remember, the risk with this setup is contained to the range of that 1 bar. So when you get a very large engulfing bar, that's added risk. So if that is too much risk for you to take, you skip that trade, because more often than not, when you get a sustained trend, you get multiple opportunities to enter along that trend, okay? And in fact here, about a week and a half later, we had another entry. Now look at the range of this engulfing bar versus this one, right? Much less risk that you're taking. Because, again, to trigger you in the trade, you're waiting for a trade just below the low of the engulfing bar, the absolute low. Once you get that trade, you go short and your stop will go just above the high of that same bar, okay? And then see here a couple weeks later, there was another one. Let me zoom into this area so you can see them clearly. So we have trend and momentum in our favor. We get a pullback. We have a bearish engulfing bar. We wait for a trade just below the low. And then if we get that, we go short and we put our stop just above the high. Now you see how in this example we did have a bit of a gap. Now that's not huge, so that's okay. But if you do get a situation where to trigger you in, it happens on a gap, you have to reassess your risk, because your entry point into the trade, you have to measure the distance from the entry to your stop level. And if this was a much bigger gap, then you'd have a much larger risk. So you can have plenty of setups with the system, so you can be selective. You don't have to chase, and you don't have to accept all that risk. You can look for the trades that have minimal risk. Let's look through a few more examples. Here's a chart of Baidu. Clearly see that we're trending higher, and we have a very nice slope here, higher. Whether you measure it on the bars or that 20. We get a nice pullback. Okay? Let me zoom in. And a nice pullback, and here's a nice bullish engulfing setup. Now you see how it doesn't trade, or sorry, on this bar, it doesn't close right at its highs, all right? But it is green. So if it were to close at its highs, that would usually mean we're going to get a much bigger follow through. But regardless, this setup is consistent enough that it will give you considerable profits, okay? So have a look again. It moves in your favor immediately, all right? And that's what's key here. Why? It's really, this is very simple. It's the momentum in your favor that's really helping this trade move forward, okay? It's nothing more than that. It's really basic technical analysis, but technical analysis is all about finding something that works repeatedly in any type of market, and then it just becomes a matter of repeating that process. Okay, trading does not have to be difficult, and this is a very simple and easy method to follow that will be consistently profitable for you. Here's a chart of Vora holdings. Now when I zoom in, we lose a bit of the slope, okay, but we have that slope higher. We get this pullback or consolidation phase, and we get a nice bullish engulfing bar. This one closes near its highs, and you can see here we're green on green, and that's totally fine. It triggers us in, our stop goes just below the low of that bar, and off we go. A couple weeks later, we get another pullback, another setup. Okay? Triggers us in, stop and go just below the low, and it, boom, there it goes. So you see, the key to this in the long run is minimizing your losses when you do get stopped out, okay, and allowing your trades to run. Now we'll talk a bit about exits a little later, but you can see when you confine your risk to the range of the 1 bar, you know, how many winners would it take to overcome a few losses? Not many. One generally wipes out many, many losses, and what you will find with this is that you will have more winners than losers. Now here's LUV, and this is a very nice clean chart, all right? And again, multiple entries along a sustained trend. Here's Nike, and Nike off this gap on earnings, okay, retraced, gave us a nice setup. If this risk, the range of that 1 bar was too risky for you, you got another setup here, and there's actually many more along in here as well. Now, let me show you an example of a negated trade quickly. Here we have a chart of Visa, and here we had some downward momentum, and we got this nice bearish engulfing setup. So we were looking for a trade just below the low to get us in, but instead it traded above the high first. That would negate the trade or disqualify the trade, okay? For you futures traders, here's a chart of platinum. everything stays the same, works exactly the same way. You're looking for that trend and momentum, that slight pullback or consolidation. There's your setup. Trade below the low, and in you go. There's another one. Boom. Okay. Crude oil. We all know what's happened with crude lately. But look, multiple clean entries along the way. All right. Here's the Aussie, check, Corona, same thing. What's important here is that momentum that you have in your favor, be it up or down. Nice clean entries along the way. Here's the New Zealand Canadian dollar pair. Same thing, multiple entries. And what do you notice with each one? They tend to move in your favor immediately, which is, it makes trading that much easier. Here's the British pound US dollar. Sustained trend, you get 3 entries along the way. Okay? Now, I know we have a very short period of time together, so, and I've noticed there's a lot of questions, and I want to give you a chance to throw out a few symbols so we can analyze some charts together. I'm actually going to bring on our coaching coordinator, Raul. He's going to help me read off some questions and some symbols. So if there's a symbol you like now, please type it in, and we'll also try to get through some questions at the same time.
Vince, good morning.
Good morning.
It's been a busy last couple of days for us.
It has.
Got off a plane last night.
Absolutely.
Money show in Orlando.
Yep.
Back home now. All right, let's start with Charles. He wants to know about GoPro. Now, these are a little bit tougher because not a lot of history here.
Exactly. When you don't have a lot of history, you should be a little more skeptical with it. What you want to do whenever you do get a setup is actually look to your left, look at how it would have worked on that security in the past, and see how many times that setup would have worked versus it not working. And because you will find some stocks that it works all the time, and others where you don't get very clean setups. Now, without much history, it's difficult. But let's have a look to see if we do, if we can find one. Here, let's see. This might have been one, but you see here on GoPro, when you get a situation like this where you might have a setup, you really have to look at that 20-period moving average. Here it was flat, so you would not have wanted to take that trade. Same with here. You see the setup in here? Okay? Clear setup, but look at the moving average. It's flat. You do not want to take that. Okay? So I don't see any actually, there was one right here. Now, just before earnings, which would have been very risky to enter, but here with momentum, clean momentum, you wait for a trade below the low, and you see how it did happen this very next day, and it happened to gap lower on earnings in our favor here. But I wouldn't suggest trading it 2 days before earnings. Folks,
I'm going to apologize in advance if we can't get your symbol. I've got over 130, 140 now.
Okay.
Let's do the most popular one, Apple.
Apple, okay.
That was for Rick and Jeanette.
And this is great. This is what you want to see, right? Nice clean chart, nice strong trend momentum in our favor, and then you want to pick out these areas with these engulfing patterns. And you see here, it's just a consolidation. It just took a break for a few days, and then there's your reversal signal telling you this consolidation phase is over and our uptrend is going to continue. What's important here, the most important thing, is that throughout this consolidation phase, that 20-period moving average, okay, maintained its slope. It never wavered. It didn't start to roll over. It was steadily higher, and that's what matters. And these are the nice, clean, easy trades that you want.
Can we do a Forex example for Tomas?
Sure.
Euro, US dollar.
Euro, US. Let's look at Euro, USD pair. There's another beautiful chart. Just like oil, the Euro's been getting devastated lately, and you can see, I can spot these fairly quickly. Sorry, I got the wrong drawing tool there. Let me get this back. And you will be able to spot these very quickly on your own once you flip through a few charts and get used to the setup, okay? But they're everywhere, okay? Just follow those rules. Make sure you follow those rules. But you can see that throughout a sustained trend, you have multiple opportunities to enter. So if you miss one, there is no need to chase, okay? Be patient. And it looks like we may have another signal right here. Now, of course, remember, there's a difference between the setup and the trigger. We actually do need a trade below the low there to get us in, okay?
Okay. Brock, price line.
Price line, right. Price line. There was one here recently. Let's look. Oh, there was a beautiful trade in here on price line. Okay, you see these are everywhere, and really, you know, it's easy to look back on a chart and find these periods of momentum. Okay, but once you have them here, once you get used to taking these or spotting these, and you flip through some charts, you'll be able to pick them off very easily. And just remember the rules. Wait for that trade to get you in the trade first. Don't jump at it while this bar is forming. Okay? Any?
Let's do a futures one if we can. That's for Lenny. He wants to know about crude oil.
Crude oil? Sure. Yeah, we looked at crude earlier, and you can see now the real nice thing about this, don't think we're going to have time to get to it, but the exit strategy that we use with this, if you had gotten in at any of these levels, okay, you would have been in up until this level here, okay, right up until this level here. So these can be significantly profitable. And remember, the real benefit here is that the risk, whenever you do get stopped out, is confined to that one bar. All right?
We've got a lot of questions. I know you want to get back to your presentation, but we will save time for as many questions as we can.
Okay. Yeah, we have a very limited time, so I just want to recap what we have here, what we've discussed this morning. So, to summarize, I've shown you a system that will work in any market: stock, options, futures, forex, any time frame, any price level. You saw how easy it is to spot on a chart. Okay, we've traded with this for many, many years through all different types of markets, and it is strong enough to use it as a standalone system or as a great complement to whatever you have. And you saw that another real benefit is that it tends to move in your favor immediately, which makes a huge difference for options as far as and with managing the trades once you're in it. And one of the best benefits is that the majority of trades that don't work out are not even losers. They're just negated trades. Now, I saw many questions on exits and other people asking what else they can add to this. I just don't have the time today to go over that, but we do have a class coming up, our pro class, February 21st. 1 p.m. Eastern Standard Time. It's set for 2 hours, typically goes closer to 3. I will be teaching this class myself. And what I'm going to show you that day is the full system from entry to exit. I'm actually going to show you 5 different exit strategies that can be used with this, but we're going to focus on the one that myself and the other traders here use on a regular basis. But I'm also going to show you a very unique way of adding support and resistance to this that really improves the accuracy, okay? And I'm going to teach you 2 different Fibonacci tools, one that will help you with the entries and another one that will help you identify exit targets, okay? And I also noticed many of you are very active, so to keep you very active, I'm going to show you 4 additional trade setups that you can use with this. In other words, when you get to that point where you're looking for that reversal signal, rather than looking for just the engulfing pattern, there are 4 other setups that we look for that you can use along with the other rules of this system, okay? And one of the best parts of this class, as far as the feedback we've received from previous members who have taken it, is that near the end of the class, we do a live scan for real trade setting up that coming week. I will share my watch list with you. I'll show you exactly how I look for trades every day with this setup, and hopefully together we find a number of trades that we get to walk away with and hopefully profit from together in the coming week. Okay. Now to sign up, just go to tradingwins.com/candle. The link will also be posted in your chat. And what you'll get with this, as soon as you sign up, is within about half hour after signing up, you actually get a recording of the previous pro class we did. So you won't have to wait until the 21st of February. You can watch this recording and start using this right away. But regardless of that recording, we're still going to reserve a live seat for you at the class on the 21st. And we're also going to throw in a 30-day membership to our pro service. Now, our pro service For our pro members, we record videos nightly from Sunday to Thursday, send them out to you by email. We recap what the markets did that day, where we think they're going. We review our open positions. We highlight new trade setups, and we also highlight trade setups not just from this system, but from all the systems that we use here at Trading Winds. And for any trades that we ourselves take, we send you trade alerts, the entry as well as the exit. Okay, and those nightly videos are really meant as an educational tool. While we're describing the setups and the markets, there's a lot of other setups we come across technical analysis-wise, and we explain those. So they're a real learning tool. It's excellent. Now, at the end of the 30 days, if you're enjoying the service, you don't need to do anything. It will automatically renew at the $97 price point. But if you'd rather not continue for whatever reason, just give us a call, and we'll cancel that for you. But together, this whole package is $691 value. We're not going to ask you to pay for that. Anyone on this webinar today, all we're asking for is $97. Okay, we really just want to give you an opportunity to have a look at what we're offering. Again, the link is tradingwinds.com/candle. Now, unfortunately, we do need to limit the class to 25 people. Reason being is we tend to get people from all levels of experience, and we have a lot of questions. And the real goal of this class is to help you grasp it at a level where you can walk away and trade this like a pro. Okay, so we want to make sure we answer all your questions. And that's also one of the reasons why we send you the recording of the previous class. We want you to watch that, and if you have any questions, come prepared to the live class with those questions, okay? And we'll answer them all. So for us to limit or get through it in time, we do need to limit this to 25 people. Okay.
All right, we've got about 5 minutes, so we'll do rapid fire questions.
Yes, please. Let's do that.
All right, so from CL, entry is below the engulfing bar, is that correct?
CL?
No, the gentleman's name.
Oh, I'm sorry.
The entry is below the engulfing bar?
If for a short trade, yes, you have to wait for a trade below the absolute low of the engulfing bar. That would trigger you in the trade, and then your stop will go just above the high of that engulfing bar.
Tomas is asking, can the period time on the SMA be wider, like 50 instead of 20?
You can try it again. We have traded this for many, many years, and we have tried different settings. We've also tried a weighted and exponential average. What we found is the 20-period simple moving average works best, regardless of whatever time frame you're trading this with.
Now, you've shown us on daily charts. You've shown us on longer charts.
Absolutely.
It works on both.
Yeah.
Question from Laureen is, does it work on 15-minute charts?
Yes, actually 15-minute and the 1 hourly work excellent, okay? Excellent. And if you're, you have an IRA or a 401k account, you like to trade longer term, weekly charts are fantastic as well. Okay.
From Harry, how big a portfolio do I need to trade this system?
You really don't need a big portfolio at all. Again, follow our money management rules. We only want you to put about 5% of your account balance in any one trade, but especially if you're trading this with options, because remember, it's not really the amount that you're putting into the trade. Your risk is defined by that one bar, by the range of that one bar. Okay, so that's how you should set up your trades.
Funny question from Janine. She says, how long will it take me to make back my $97?
You know what? Actually, funny you should ask, but the week following each class, we typically get a slew of emails from people telling us how much money they've made off the trades that we find during those classes. And believe me, they've more than made back their money.
Francine wants to know, she just ordered. When can she expect the recording of the previous session?
Once the order gets processed, it usually takes about half an hour for our system to fully process your order, and you should receive an email with a link to that. On another note, once you do sign up, you will receive a second email asking you to confirm your email address. You need to click on the link in that email, okay, and confirm it, because if you don't, you won't receive the recording or any of our nightly videos or anything like that. You really need to watch out for that email.
Francine, I want to thank you, Claire, Dennis, Mike, John, William, and George for signing up. Really appreciate it.
Excellent. Glad to have you with us.
And again, same comment as always. lot of women joining. I see.
Yeah.
Francine is just one of them.
It's fantastic. I say this all the time. When I first started trading, really, there were no women. It was really a boys' club, but it's come a long way. And now our pro member group is really about a 50-50 split, which is great.
Now, you had mentioned 4 additional trade setups.
Yes.
Harry again was asking, will those work specifically on options? I know you mentioned they work on stocks option futures.
Oh, yes. All the setups, the engulfing as well as the other 4, will work in all markets. They're simply a way to spot the reversal point. That's all it is.
From what you've taught everyone today over the last 35, 40 minutes, is this a system that they can use to go out and now trade?
Absolutely, they can. What I've shown you today, you can walk away with it, trade it. You'll see how consistently profitable it is. What we're doing in the class is really expanding it. We're showing you all the exit strategies because we didn't have time for that. But we're showing you how you can really trade this like a pro. We're taking it to the next level by adding in a very unique way of plotting support and resistance, which would help you with any trading strategy, really, but really helps improve this one, as well as those Fibonacci tools and the additional 4 setups. What I want you to understand is you're going to find a lot of setups with this, okay? And let's say you're trading on a daily time frame, the market closes one night, you sit down, you flip through a few charts, and you find 5 different symbols that are setting up. You don't want to trade all 5. You want to select the best of the best, right? The 1 or 2 strongest setups. Well, what I'm going to show you in the class, as far as adding the support, resistance, the Fibonacci's, all of that, are going to really help you separate the not so strong setups from the really powerful setups, and that's really, and you know, all we're asking is 97, but we're also the real goal of this is to have you with us, join our group for 30 days so you can look over our shoulder, see exactly how we trade this. So by the end of that 30 days, you will have a very strong understanding of this concept.
All right. We always get this question. Yeah. Put your cards on the table.
What's that?
Tell me why you want people's $97. Do you need it?
No, I don't. I mean, look, I always get this question. If this is so powerful, why do you need to sell the coin? Why don't you just trade it? You know what? I do trade it. We trade it here, and we make plenty of money off those trades, okay? But it doesn't mean that we can't help you do the same thing. And really, we could be selling this for a lot more. And once you see it and test it, you're going to see how consistent it is. You'll be more than happy you spent the $97.
You're really a teacher at heart. This is a labor of love for you, isn't it?
Yeah, you know what? I really wish I had someone who would have pulled me aside when I had first started out and simplified trading for me and showed me the basics. Because
people were using abacuses.
Yeah, that's right. Exactly. You know, there were tickets. You had to phone your orders in when I started. But you know what? When I first started out, I lost a lot of money trading. I actually started out trading based on fundamentals, and I got burned big time. And then that's why, for our pro members, I always tell the story. I don't think I'll have time now, but I lost a lot of money early on, so I learned very expensive lessons in the market. And what we're really trying to do here at Trading Wins is save you not only time here, but really save you from those expensive market-taught lessons. If you don't simplify your trading, and if you don't trade with something that has been proven, you are going to lose money, and it's going to hurt. I've been there, and I don't ever want to go back.
Claire says she's ready to join. Can you just recap the offer again?
Sure. So again, the class is February 21st, 1 p.m. Eastern. It will be recorded. If you can't make that date, it will be recorded. And I'm going to show you the full system from entry to exits. I'm going to show you the unique support and resistance analysis we do, the Fibonacci tools, 4 additional setups, and we're going to do a live scan together to come up with trades for that coming week. The link is tradingwins.com/candle. It is in the chat. You can just click it from there. And we do, unfortunately, limit it to 25 people. Now, our staff is here. The phones look very busy. If for some reason you can't get through and get voicemail, leave a message. We'll get back to you shortly. We also have a live chat off our homepage. We'd really love for you to join us. It's a great class. We've gotten great feedback on it, and I'd love to see you there.
Folks, it's $97, tradingwins.com/candle. I really hope you can join us. If you want to hear the silky smooth voice of Vince Vora for 2.5 hours, I do recommend it. And I guarantee you will learn a lot. When you leave that session, you're going to be a better trader. On that note, I want to say a special thanks to the gentleman that we met yesterday in Orlando.
Absolutely.
Reed Chapman, it was really nice to meet you. Nice to share a drink with you yesterday at the World Money Show in Orlando. Thanks for your hospitality. Really, really appreciate it. Thanks for having us on. We really are humbled that we're part of the group here. That's last word.
Yeah, I want to thank everyone for being with us today. I hope you found it valuable and really hope you can join us at the class on the 21st. And a big thank you to everyone at Investor Inspiration, especially Reed. It's always great to see you, Reed. We'll see you at the next live event. And thanks again for having us on. Hopefully we can do this again. So with that, I will throw it back over to you.